Well, hello. We're going to find out how to get into the top 10% of traders. Roll the intro and I'll tell you. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the overgrown child that is the Scruffy Trader. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. That sounds good? Please click the little subscribe button, smash the bell and the like icon. Genuinely helps and we'll crack on. So what on earth am I banging on about now? 10% of traders. Because surely every trade is profitable. Let's be honest. I saw this.
You ding dong!
Give it to me again.
You ding dong!
That must be true. I mean, bloody hell. He got a green Lamborghini after a few months. Yeah, of course he did. That one kind of grieves me when I see all these flashy adverts and one thing and another. And I think what happens with it is it almost sets you up for a fall before you start. That's almost like trying to say to a young kid, there's the keys to my very expensive, powerful car. Go drive it. They've never been in a car before. They might know what a steering wheel is and an accelerator. But it doesn't mean to say that they can drive it. And if it's a powerful car, how are they going to cope with the speed? You know, they're not. It's ludicrous to think that you would let somebody loose on something like that has absolutely no training or knowledge of that machine. Stupid. And likewise, if you start a job and they decide that you're on a bench press lathe, this thing is lethal. You get your hands caught in it, it'll tear your arm off. So would you let somebody loose on it that's never seen it in their life? Of course you won't. And trading is a job. It is a lifetime career. It's not a gamble and it's not easy money. And it's certainly not a casino. And if you think that, well, trading's probably not for you. But if you believe it can be a career and a job, and you treat it as a job, in other words, get up, do your 8 hours, and then finish, it'll pay you as a job. But you don't always have to be clicking the button in those 8 hours. A lot of the time it's just research and waiting. Personally, I trade once, twice a day, but I'm in front of the screen for a good 8 hours, maybe longer, looking for that perfect trade. Because that's all I need. And that's what breeds my consistency, because I don't overtrade. I don't take chances. Everything I do is quite calculated and thought out. And I show that to the guys in the Telegram all the time. You know, and they talk and one thing like, I get in here, I doing this, and I see them, they're all excited, and it's like, yes! And no, I'm just going to listen to this music video and see what happens. And they're like, what? What are you doing that for? It's moving, it's overstretched, it's ready. No, it's not. How do you know? Experience is how I know. And I've seen it before. And I've been through all of what I'm about to talk to. So, how do we get to this 10%? And is this 90% failure rate true? Well, there's an old allergy within trading called the 390s, you know, and it's wrote 90, 90, 90. And what it stands for is 90% of traders lose 90% of their money in 90 days. Well, yes, the failure rate is very high. Is it 90%? I think that's up for debate, shall we say. But my current broker, or one of the brokers I use, is currently at 76%. All right. But let's just say it's high. And I'm going to do a little breakdown of the way I see it. It's not cock accurate, but it'll give you an idea of what I'm driving at. But there are a number of elements that kind of sort of highlight, shall we say, why the failure rate is high. So we'll go through it. So the first lot are just taking a punt. Okay. So if you've got 100% of traders, one of the biggest reasons that people fail is because they've seen the glossy advert and they're just taking a gamble, they're taking a punt. Well, let's be honest, if you're taking a gamble, go to the casino. So what are you left with? Well, I think that's probably about 50% of them. So if we break that 100 into 50%, that lot are gone already. So we're now left with 50%. So where are you going with it, big boy? How on earth is this going to make me part of 10%? Well, it's not, but it's going to give you a heads up as to what to look out for. Because the next part of it is quite important. And it is actually your education. And I know straight away you're thinking, hold on, I finished school years ago, I don't need to be educated. Yes, you do. Because this is a job. And like most jobs, you need to know what you're doing. If you don't know what you're doing, you're going to make mistakes. And the problem with this job is, if you make a mistake in your factory job or office job, whatever it is you happen to do, you still get paid at the end of the day. In trading, not only do you feel bad for making a mistake, you pay the market. It takes money off you for making a mistake. So your education is very key. And that will wipe out another 50% of that 50%. So if you've got 25 and 25% here, two 25s make 50%, education is going to take out another 25. And I know you're definitely scratching your head. Thinking, well, how is education going to sort of lose half of those traders? Because education is split into two ways. You have good education and you have bad education. And if you're setting out on your career path, you can find all the education you need free. You genuinely do. And it's one of the reasons I don't sell a course. I don't need to. You know, I make my money off the screens anyway. But you can find a course free anyway. You know, and they're readily available. But there's also a lot of dross. And that's the difference between free and paid. A paid education will fast track you and get you through the bad elements. A free education, where you're just looking at YouTube, reading the odd book, can take years. Because you're going to plod your way through. You're going to gain a little, give it back. Gain a little, give it back. Because you haven't got anybody on your shoulder saying, no, look at this. So sometimes paid education is just a fast track. But it's not to say that you don't have to be able to do it free. You certainly can. Okay? But you need to be able to filter out the dross from the good. And some people can't. And that's why they fail. Because they followed bad education and then just give up. Okay? And then it comes down to something else. And it's kind of 3 and 4 are linked together. 3 is the bad side of what I'm about to talk to, and 4 is the good side. But from this 25, how does another half of this fail? Well, it's very simple. This lot here, 12.5, 12.5, overtrade. They trade too much. See, what's happened is they've come in initially almost like a punter, but they found that they liked it and they were pretty good at it, and they get euphoric and they really get in because they've won a bit, give a bit, won a bit, give a bit, and they can almost see what's going on. So they have a little bit of education, and the education's got them a little bit further. But the one part that they don't have is self-control. And when you come into self-control, you need to know when to stop as much as when to start. Now, I've told people many times how many times I trade. I trade once, twice a day, if I'm lucky. And that's what breeds my consistency, because I know that's all I need to do. And if I don't need to be in the market, I won't be, because the market will always be better than what I am. And I am well aware of that. So I get in, get my money, I get out. Now, these guys here don't. They might do their 20 pips, their 50 pips, and think, I'll just take that extra one. Or they're hunting around all of the markets all the time. It's 28 pairs. God knows how many shares. God knows how many ETFs. God knows how many commodities. There is thousands of products you can trade. And they're constantly hunting through them, looking for these trades all the time. When really what they should be doing is looking for one. Just one. But they don't. So they overtrade. And because of that, they end up giving their money back to the market. So they'll only ever be toitering on break even. And that comes back to your education. See, you get a good educator, they will tell you not to do this, or at least they should be. Overtrading is a nightmare. So that leaves you with 12.5% of this lot, which is roughly half of those people that are profitable within a broker. You see, the brokers say 75, 76%. And out of those 25, say, you're going to have half of them are doing pretty well, and the other half are a shade over break even, but they're still classed as profitable. But how do you get into that 12.5%? Well, it's number 4. And number 4 is my favourite quote. Know thyself. Now, if you know yourself, you know when to stop, you know how much risk to take, you know how to control your emotions. And the mindset is what makes the difference between the 90% and the 10%. And I know that sounds odd, but trust me, it's true. You know, and I am pretty sure that if you're an active trader, but you're not quite making money, you will, 1, be hunting the markets all the time. You will be taking substandard trades just because you want to press the button. You think, I'm here for 8 hours, I must just press the button. It doesn't always work like that. You know, pressing the button is the easy bit. The hard bit is all of the homework that goes behind it. The education that you need to understand what that homework is. And then finally, you need to know yourself that you're capable of pressing the button at the right time. So you can make money on any market. It doesn't matter whether it's trending down, up, and it doesn't matter what direction you're going in. As long as you know when to press the button at the right time. Because if it moves coming down, you can counter trend it, but you need to know when to get out. Education will tell you that. You need to know when to get in. Education will tell you that. But you need to know when to stop. Know thyself will tell you that. I hope that kind of makes sense, but that's why I think a lot of people don't necessarily succeed. It's not that they're bad traders or anything like that. I just think a lot of them come in and they haven't got the aptitude for it in the first place. So they'll just put a few £100 in a broker, lose it, and think, not touching that again. And that wipes out most of people that'll ever trade. And then the last half is just people that haven't quite got there yet. Just need to educate themselves, put a bit of study time in, and understand what the charts are and what they can give. You see, if you're swinging for the fences all the time, how do you know the market's going to give you that? You know, look at your ATR, it'll tell you how far the market's going to go. But that's the maximum. What if you got in halfway up? So you've only got half the ATR to play with. And that's assuming you can nail the top. Now, I often say I work to a rule of 3. And that rule of 3 is very simple. Don't look for the bottom bit. I don't look for the top bit. I look for the bit in the middle. And I'm waiting till I can see that. And that makes me consistent. Because one, I'm not over trading. And when I do trade, I can see the bit where I need to be. And I can manage that little trade. And then when I'm paid, I stop. Know thyself. So there we go, guys. Just Big Langers' thoughts on how to become 10%. Hope it made sense. But as always, do what you love and the money will follow. See you all in the next one.